to our discussion on reinsurance market trends and 2025 outlook. I'm here with Manondo Chaponda, who is our underwriting manager here at KlaptonRe. And between us, we've spent quite some time navigating the ups and downs of our industry, and we're just here to unpack what has been happening, what's coming, and what it all means to us as reinsurers. So we'll just dive right in. So looking back at 2024, what's your take on how the market has performed? Feels like a roller coaster, right?
Well, that's a good way to put it. We saw some solid premium growth, but also some really deep challenges. So economic pressure, inflation, and of course, the ongoing impact of climate risks. On the brighter side though, reinsurers adapted very well. We saw them breaking their pricing models and diversifying portfolios just to make sure that we could keep afloat.
Yeah, inflation is a big headache. But before we get into that, what would you say were the biggest challenges that reinsurers had to deal with? Yeah.
Well, that's a very good question. So a few stand out. Capital constraints made underwriting tougher. The rising cost of claims made pricing modeling tougher. Then there's the aspect of climate. Catastrophe losses became more frequent and severe, making risk modeling more critical than ever.
I couldn't agree more. But now let's look at 2025. What do you think we are in the market sector? Is it still a hard market, or are we seeing a bit of some softening?
So it's a bit of both. Some areas are softening, especially where capacities have improved. But if you look at the high risk segments like the natural catastrophes and cyber, they're still very much in the hard market phase. And then you could actually see that the rates here are holding up well and capacity is being deployed selectively.
And speaking of risks, inflation and climate change are really keeping us on our toes. How do you think these are shaping pricing strategies?
So inflation is driving the cost of claims up, no doubt about that. At the same time, higher interest rates help the investment side of the business. So now what's happening is that market capital also is becoming expensive. So then you need to find the right balance. You need to ensure that the pricing is actually reflective of your costs, but at the same time not pushing clients away.
The tough balancing act for sure. But then there's climate change, and it's reshaping everything. How do you see reinsurers adapt to that challenge?
So a lot of focus on data, modeling, and alternative capital solutions. So we're seeing a lot of parametric products that trigger payouts based on event intensity rather than traditional claims processing. And generally, reinsurers are tightening up the underwriting criteria. That's so that they can manage the exposure.
Agreed. And if you had to sum it up, what's the best strategy for reinsurers looking to stay ahead in this evolving?
Diversification. So both in risk and capital sourcing. So digital transformation is no longer negotiable, and strong ESG and regulatory focus will set the leaders apart. So flexibility and innovation will make fun.
Spot on. Thank you for the insights, Manondo. And thank you to everyone who joined us today. It's always great to talk shop and to explore what's happening in our industry. Until next time.